Welcome everyone to the Real Estate Market Update. This is Friday. I think is it the 16th of July? It just 17th. I mean, the days are just flying by for us. Welcome. We want to go over the latest news as well as the latest data that's out there here in Southern California. And we want to go over the segment REO properties and what's active, what's not, what's happening with that foreclosure market. So my name is Troy from the House Heroes.
I'm Ryan.
And welcome to a Friday. Hope everyone out there is safe. But let's get right to the news, Ryan.
Yeah, let's jump to it. So we've got news on forbearances. 8.6% of mortgages were in forbearance. And that was either they needed the forbearance and actually were not making their payments, or just asked for it in case. That number dropped to 7.8%. A huge drop. It was more than was expected, and that puts us back to April levels as things were just starting to ramp up. So that is solid news that people are able to pay their mortgages, and we're seeing these forbearances start to go away already.
So one thing I want to talk about that, and which is very interesting, as we've gone through the pandemic through March, April, and May, me and Ryan have had this conversation with everyone. We show the unemployment numbers, and then we show the forbearance numbers, and we're just coming up with the same conclusion we had 3 or 4 months ago, that the majority of people who were laid off or first-time claims for unemployment are basically your entry-level jobs in the hospitality industry, restaurants, hotels, airlines, or we look at ships or being on a ship. And so when we see that, we're not seeing those kind of crazy numbers from the unemployment actually go to forbearance. Now, at the very beginning, we did because they actually included the inquiries, not so much people signing forbearance notes. But we saw the inquiries go up, and so the national news out there was so negative on this forbearance side. They were saying, 50% of all mortgages are going into forbearance, and and then they attributed that to several nationwide analysts. There's a few that Susie Orman, Diane Olick, they all came out and they looked at the forbearance numbers, but they didn't really go and see exactly
what makes up that number.
Those micro numbers, right?
What's really going on there? And that's the thing is, if you've lost your job, it's devastating. We're not here to minimize that. What we're trying to say is, what do these numbers actually mean, and what do they mean related to housing? Not necessarily how does it make you feel, right? So as you break down these numbers, they were reporting these astronomical numbers. Well, back in the day, pre-COVID, right? BC, before COVID, you had to show a hardship before you could get approved for a forbearance. They just went ahead and did carte blanche. Hey, if you want a forbearance, let us know. We'll go ahead and process it. And so you had a lot of people asking for forbearances, getting the okay, but then not doing it. They just wanted to know that, hey, we've got this safety net here if we need it. And now they're realizing, hey, one, we don't need it. And two, maybe the deal's not that good if it wasn't from, if my loan wasn't more, serviced by Freddie or Fannie or owned by Fannie or Freddie. Maybe it's not that good of a deal. It's not even worth taking. Plus, we're starting to see what some of the damages could be to credit and things like that. And people are saying, hey, you know what? We didn't need it to begin with. We don't want it, and we're out. And, I would hope to think that some people now are, they've got their job back. They've got, maybe a different, job. And now they're making their payments as well, and they're off of forbearance. That's what we really want to see. Yeah. But until we figure out what that true number was of forbearances, those crazy high numbers they were reporting that they were saying, because these numbers are crazy, we're going to go through a foreclosure wave like 2007 and 8. It's just, we knew it wasn't going to happen. We didn't see it in the trenches. And now the numbers are reflecting what we had already, talked about and said we were seeing there in the streets.
Yeah. So what else is in the news, Ryan?
So fuel to the fire on this crazy market where we don't have enough inventory. We've got a ton of demand. One more thing to just keep pushing more interest and more demand. Interest rates are at historic lows. I never thought that I'd be saying that average mortgage rates are below 3. So as Troy calls them, the terrific 2s are here, and they're here in a vengeance. We're talking average, not just one guy down the street, friend of a friend of a friend who these the average rate has dipped below 3%. So 2.98 per Freddie Mac this week. That's crazy. So we got to just mark that one on the calendar. I never thought I'd see it when I was making calls for a mortgage company back in the 90s and things were at 9%, You
just ate yourself, by the way.
I know, right? Sorry if I was there calling you. But aren't you happy?
76% was a fantastic deal.
But I got you from a 9 to an 8, so weren't you happy? And then it's official.
Today.
So the U.S. won't see a housing bubble crash anytime soon. So this is one of our favorite, economists, does a lot of writing for Housing Wire, Logan, and we follow him on Facebook. You guys should follow him as well. He's got amazing data. He's got the charts, the graphs, he really dissects it and breaks it down for us. And that's where we're at. I mean, he's just saying that he's looked over all the different data and he does not see that the housing market will have it. He's saying that it's not in a bubble and it will not crash anytime soon. So that is just solid. So read through that article. We went ahead and posted it on our Facebook. And please subscribe below to our YouTube channel, to our Facebook channel. As you know, we go live Tuesday, 9 o'clock, and bring you everything related to real estate. Roxy's coming at you live on Thursdays, 8 p.m. in Spanish. Then we've got Deal of the Week Fridays, and we drop this market update Fridays as a recorded edition as well. And definitely follow us on Instagram. We're out there in the field. We're putting up stuff constantly. The 5 things you should be looking at when you're out there looking to buy a home. And also tips of the day and crazy things we're out there seeing as well. So definitely like and follow us, please.
So our local market here, the market update. First thing we like to do in this segment is we like to go over the foreclosures. A lot of people have over the years, that is a big topic in real estate. Hey, Troy, when's the foreclosure market? When can I get that deal? And I always had that elevator conversation, which is 30 or 45 seconds. When we did actually, hit that 2009 mark where the housing market crashed, they were loaning anybody any money. So if you're looking at when the market crashes, it's almost impossible to get a loan because no one knows the uncertainty of what's going to happen. And so that's why I tell people, you got to time it right. You got to figure out why the market's going up and why it would crash. And so, my little 45-second, conversation, would lead to, well, the best time to buy is today, right? Because today, if you look 10 years from now, traditionally, you're always seeing it go up in a 10-year span. So, but as we discussed last week, if you saw us last week and the last couple weeks, we call it the Mendoza line, or we call it at 200 REO. When we cross that, I mean, at 200, there's just no REO. We consider it almost negligible or none. And now we just keep going under that. So we just lost 5 more, from 1 week to the next down to 185. This is ridiculous. I mean, this is, some of the indicators that, we talked about Logan is looking at, but we're not seeing these nationwide economists look at these numbers. They just keep looking at the forbearance numbers, or they keep picking and choosing what numbers they want to. And, as I get older and I watch the news, and I'm sure Ryan does the same thing.
I do not get older.
But you watch the news, right?
Okay, maybe.
We're just seeing, the news that's being fed to us is what the media wants fed to us. I don't like to say all the time fake news, but I just think it's manipulation. It's manipulation news, right?
It's if it bleeds, it leads. So crazy big numbers, and that's what they push at you, not what's really happening and what it means to you.
Awesome. So let's go look at the first county here, Los Angeles County. And literally the numbers are going off out of the charts, right? I mean, let's be honest. We are happy to see that the actives, and we're looking at that very green bar on the right-hand side, for the first time now in a long time, we've actually now crossed into 1,400. We needed to see that on the market.
We really do.
We are the pendings are crushing the inventory, and we're down to under 2 months of inventory on the market. We need to see those actives hit the market, and we're really excited that July, people are kind of loosening up. They're getting done with COVID here. They want to put their house on the market. So now we're seeing homes in the market. We're seeing that pending number still high. It's still getting sucked up. We're also seeing these solds, and they're steady over 1,000 as well. So we're feeling that the market is stabling a little bit through that. And that's what's good. Ryan's
and, you know what? And I think this is one of the biggest things that is really pushing people off that ledge and making them list is when you look at the median home price in LA, you just watch it just start to take off. So a month ago, median home price, which is half the homes being sold in any given month are below this price and the other half are above, it just completely took off from 655 to 710. That is a huge upswing. And we see it. We see it firsthand. These multiple offers, these properties are selling well above the last comp. People are bringing in money to make up the difference and appraisal shortfalls, and they're fighting over the opportunity to do so. So because of that, I think it started to lead, especially in LA County, which is seeing a huge uptick in that median home price. I think it's finally starting to push people in. Well, hey, if we can get that, let's do it.
Yeah.
And, I've talked to clients that, they know they've got some slab cracks and this and that, and maybe their home isn't in the best condition. And they're like, well, it's always going to be a hassle to sell it. Now is the time because buyers just want in. They will take on these projects. I know we've got a client right now in escrow, huge slab crack. They've got a bid to replace a huge portion of the perimeter wall. They're doing a FHA 203K renovation loan on that property. The seller was willing to take it because he knew that it was going to have problems, but he knew he's still going to get top dollar for it. Mm-hmm. He wasn't going to get torn to shreds by the sharks, the investors out there who are going to come in with a cash offer and say, well, you've got this huge foundation issue. We're going to take it off your hands for $100,000 less. No, he is getting market value. And the buyer is going ahead and getting that repair work done through that renovation loan. And because of that, I think that's what's really pushing people in. So if you guys are out there, you've been kind of toying with selling a home, now is a fantastic time to be a seller, especially if you're a move-up buyer, because you can have somebody wait on that home that you're looking to sell until you find that up leg. So I would definitely get out there and get your home listed.
So in Orange County, Riverside County and San Bernardino County, we're just seeing what we had discussed. As the pendings were so high and the actives were so low, the solds caught up and now are passing or surpassed the actual actives hitting the market. And that is scary. What that means is the inventory levels going down. Unlike Los Angeles County, where we saw a great uptick last week, we're not seeing that in those three counties. And if you look at Orange here, we're coming to a point where we're going to be so severely shorted that we're going to see prices move up, or people simply have to be pushed out to the Inland Empire.
Yep. And that's why we're seeing these numbers. For every home that gets listed active on the market, you're having 2 homes sold. And
one in pending and one actually sold.
Yeah. And that's what I meant. Like, 2 that go off the market because they go pending. And, really at some point in time, there's just not going to be anything left. When we look at next month's numbers that roll through, looking back at July, first week of August, our MLS always puts out their days on market report and the standing inventory report. We're going to be, in a lot of these areas under 2 months of inventory. We're literally selling out. We've sold out of REO. We're getting ready to sell out of everything else, So it's kind of like, bring us your weak, your broken, your tired houses, because we can sell them at this point in time. So.
And this is San Bernardino County. Got to get our graphic designer to actually. She's keeping the same numbers on the left-hand side, so you can see kind of the difference that when you're looking at it versus Los Angeles and Orange.
But it just shows you too. The amount. There's only 383 homes that got listed last week in the entire county. So it does show you too. There's just not a lot out there.
How many are pending, Ryan?
Yeah, and you had 700 go pending. So it's 2 for 1 there.
Right.
So again, every home that goes active, you got 2 that are
pending,
put into escrow, and a pretty good
1.5 sold.
So if you go a month back, right? So you have 525 sold from roughly 7 some, let's call it. I don't remember what the week here was, but you're at still at an 80% probably close ratio within 30 days. So
wow.
It's good. This is a solid market. So. And then back to those median home prices. So just across the board, every county is seeing an uptick over the last month. Obviously any given week's going to have a little bit of noise and fluctuation in it. But if you just go from 1 month, beginning of the month to the end, you got 338 to 355 in San Bernardino. You've got Riverside from 410 to 425. You've got LA from 655 to 710, and Orange County from 733 to 755. So it's just, we're seeing that trajectory just up. And again, next month's numbers are going to be crazy because I know, every client I've got, offers are going in at the past comp or above. And we have appraisal shortfalls, and they know they're going to need to bring in cash to close deals, and it's happening out there. So if you guys are in the market, I would get in quick because, it doesn't look like it's going to lit up anytime soon. So.
Well, thank you very much for joining us on this Friday night. We definitely appreciate it. We put out this every single week, the weekly market update. We want to give you the news of the week, actually the news highlights of the week, and what's happening here in our local Southern California markets. Yep. So tune in next week for the actual. We're coming to the end of July, and we're seeing those numbers bump. We're hoping to see it continue to go up as we see our offers go up and up and up and up and up, way over asking. So everyone, thank you again. It's a Friday night. You have better things to do, but thank you for joining us.
Yeah, and go on our Facebook page. So yesterday, Thursday the 16th, we posted that Housing Wire article in its entirety. Go ahead, forward that to your friends, share it, and do the same with this video as well. Please share and like. Thank you guys for watching. Peace and God bless.
Be safe.
Be safe.